The Kenyan shilling slipped to a 13-week low on Monday to close at 85.6585 to the dollar, and that was a 0.2% weaker than Friday's close of 85.5060. On Monday, the shilling touched a low of 85.90, 86.10, and that was a level that was last seen on March 25th. Looking at the Nairobi Securities Exchange, we saw the bourse opening the week with indices facing down south, with a losing streak that was going on for the 7th consecutive day. The NSE closed as nearly 1% lower to 4,761.89 points, with a lot of weak support coming in from the blue chip counters, while the all share index lost 1.3% to close at 119.63 points. Turnover, on the other hand, was down 35% to 309 billion Kenya shillings. With us in studio, we have Ali Kansachu. He is the CEO of Rich Management. Many thanks for joining us.
Hello, Beatrice.
Now, looking at the emerging markets, we are seeing a lot of weakness, and it seems the NSE is also tracking that, and also some news coming in from the US with regards to the global stimulus program. But how can we expect the market to proceed from here?
So global markets, I think, have increasingly become nervous because they know that the QE party is, the hour is now past midnight, and at some point the Federal Reserve is going to announce that they're going to taper $85 billion worth of purchases that they'll be making every month. And I think the global market has become quite uncertain. Emerging markets have actually been quite soft all year. Frontier markets have considerably outperformed emerging markets. We're seeing contamination come into things like the Rand, which hit a 4-year low, the India rupee all-time low. So I would contextualize the shilling, although it's been trading weaker, as being surprisingly well behaved in that backdrop. Yes, I described. The NSE, yes, you're quite right. The selling pressure has returned quite violently in the last few sessions. It was very gradual. We hit a peak on the 22nd of May in the all share when we were up about 34-35% year to date. We've dropped about 6 or 7% since that date, with a lot of the pressure coming in the last few sessions. And I think in part it's being driven by foreign investors who are looking around the world and just turned a bit more defensive. And we've seen some of the big blue chips in particular come off their highs.
Is it that we are seeing a lot of risk aversion in the global markets, and that is also now feeding into the local market?
I think that's exactly correct. I think, the local market was driven by about 50% of the traffic is driven by international investors. I think international investors have become a little bit more nervy, and it doesn't take much, 1 or 2 accounts looking to cream off some of the profits, and suddenly the market turns low. And I think that's what's happened. The question is, are we going to go much lower? Probably 1 or 2% before we turn higher. Macro data positive, World Bank upgrading Kenya growth to 5.7 from 5% prediction in December. And I think the equity markets are well supported, but this is a corrective phase which sort of ran away from us.
So the fundamentals are still proper, they're good?
Yeah, absolutely. I think, we're 5.7 looks good this year. And bear in mind, we had a very slow first half, so it actually means second half is going to be very quick. If I look forward 24 months, then I think, we're going to get up near 8-9%.
And of course, the fuel price came in on Friday, and it was down across the board, with the highest seen in petrol of about 5 shillings lower. But does that mean that inflation will also follow suit, or has it bottomed out?
I think inflation has been well behaved in this 3 to 7% band that the central bank have spoken about, just below 5. And I expect it to stay there. The big hit on inflation is typically drought conditions. When the weather goes awry, then you see inflation spike, and it's a little bit exogenous and difficult to control. I am worried about the fuel price, however, because crude oil or WTI is at a 4-month high. We lag by a month. So I expect prices to remain quite firm. This might be the bottom in the fuel price in the local economy, in particular because of increasing geopolitical tensions and the fact that President Obama would see that reverse Assad's victory as an existentialist defeat, and I imagine they're going to turn up the volume.
And of course, in the local economy, you have the 1.5 taxes that was introduced on all imports.
Yeah, so I think going back quickly just to the budget, I was a bit taken aback by that 1.5%. Clearly, the government's looking for revenue. Near-term revenue collection is going to not be as strong as one would have liked, and they're expecting a 22% year-on-year increase in tax collection elections, which looks a very big call to me. Historical moving average about 11%, so I don't see how that's going to happen. So near term there are gaps. The Eurobond will help. That's $1 billion is a given. They might get more. That's
2 billion?
2 billion they could, but then the pricing will have to be much more generous. So it's a trade-off between pricing and size. But it looks to me as if they're going to have to do a Eurobond quickly. I think market conditions were optimal for Rwanda.
Yeah.
Those conditions are moving against us a little bit. I think the Treasury have got to move quick.
Let's steer back to the equity market. We saw Kenya Airways on yesterday adding about nearly 3%, and this is coming after they announced a very huge loss. Are we seeing that investors are beginning to come to terms with the performance?
Look, optically it was a big number, right? So I mean, there was this sticker shock thing, but it was a known. We knew they'd had a very tough 6 months. When you compare the second 6 months to the first 6 months, they took a lot of cost out. They showed a significant improvement, sequential half on half. I think all the bad news is in the price. I mean, I don't know what else we could look at. I look forward and think actually there is a solid business that they've built up. They've taken the pain, and I think 12 months down the road we could see a share price of 25 to 30, which is nearly more than twice where we are right now. This seems to me an egregious price. Everything, the baby and the bathwater's in it, and I think the turnaround is coming. They've cut their costs. Their big issue is long-haul flights.
Yes.
And they've had delays on receiving the wide-body aircraft. The moment those start coming in, the Dreamline and so forth, it's going to be transformative for the brand and for the share price.
All right. Quickly, which stock will you pick for this week?
That's a very, very tricky thing. I think we're in a weak market at the moment. If I was looking for a stock, I might look at Safaricom, which has fallen nearly 9% in 2 sessions. I think that's overdone. And I think the core business is really firing on all cylinders. You've got a nice dividend to come, which is worth about 5 percentage points. That looks to me attractive.
All right.